Good morning, traders. My name is Brad Matheny. This is a special video on December 12th. I'm going to highlight some features that are part of the MENT Expert Growth, MENT.com Expert Growth membership to show you why watching the data and reading my analysis and following my research will help you prepare for what is coming. I just recently posted a member-only video highlighting what I believe is likely to take place between now and 2047. Yep, that's right. I'm going all the way out, almost 15 years into the future, to show you what I believe is likely to happen. And now, in this video, I'm going to highlight the MENT Live Trades foreign market indexes, showing you why I believe we're going to see some really big opportunities over the next 24 to 36 months in the foreign markets. Now, this is the MENT Live Trades page. There's a lot of data here, a bunch of stock data, currency data, futures data, but we're going to focus on the foreign market ETFs. When we go into the foreign market ETFs, we're going to look at the rotational modeling system. Now, the MENT Live Trades runs in basically two modes. We have standard modeling, which is pretty much like trading in and out of trades, trying to find the best trades possible. You can see here this BRZU trade just got us out of a trade. We got in at 92.82. We took a profit. This was a short trade, obviously. No, this was actually, this is exit. So we took... we actually got in below that. This is our exit level. So let me come down here and show you something here, like EFA. On 11.15, we got into the trade. The trade is 70.94. Last price is 73.20. We're up $3 or 3.19%. We took half profit at 73.38 on 11.24. We have a hard stop level at 68.20. And a protection level at 68.20 right now. So we are in a long trade. We're up 3%, and we've already taken half profit here, which will be approximately, because it's almost the same price, about 3.25%. So give you an idea, now we'd be looking for an exit trade. But we're going to come back over here to the rotational modeling system, and we're going to start taking a look at some of these signals. Now we're going to be looking at some of the most current signals, but there's also a few I want to show you. So this CQQQ, let's come back over here, CQQQ, and I want you to be aware of this data. So these are monthly charts, okay? We've got an extreme amount of selling all the way down. We've got good solid basing and bottoming. We have a new trigger here, which is a short trigger. Rotational modeling on 12.7, we're off 0.64%. We do not have a hard stop level, but we have a protection level at 36.79. So understand the way that works is that we would have, we would have a protection level up in this area, 36.79, keeping us very tight as far as risk in the trade. And we are looking for a short downward move here. So we will see what happens with this. This is not really what I wanted to show you. What I wanted to show you, as I'll go down to them, is these current triggers right here. IDEV and IDV. These are off just a little profit. We haven't hit any targets yet. But we've got a very interesting flagging formation. So IDV, this is a monthly chart. Again, I'm trying to show you longer term. We have got a very deep pattern here from the 2008 correction. We have a solid flagging formation coming across. Actually, you could almost come across this area, but I'll come right down here. We've got solid flagging coming right across these areas. You've got solid flagging up in this area. We've got this base. We've got a roll here, what I would call a roll from this area, A, B, C, D, looking very positive to start of a potentially big move to the upside here in IDV. We are currently in a long trade on IDV. So you can see here, IDV is currently long from 11.15. Last price is 26.96. We got in at 26.69. We got in at 26.19. Hard stop level is at 25.09. So we come back over here and take a look at 25.09. 25.09 would be right in this area. That's where our stop is. But we look like we're flagging into a very solid move. We got a very similar pattern in IDEV. So again, IDEV, we don't have a lot of data here. You can see it only goes back to 2017, but you can see that we've got this sideways flagging formation. And then even though I can't draw it across this area, I'll draw it across this area. Got this flagging formation. And again, we can look from this area. We have this bottoming formation coming up. 1, 2, 3, 4, looking like a bigger breakout. Now, hypothetically, ladies and gentlemen, when you look at something like this, you would want to pay attention to these previous high levels as a target area. But again, we could see a big move. So 2024, understand, could be a bit sideways. 2024 could still move up and be a bit sideways into the end of the year. But I think this could continue to move quite a bit higher. And I think we could be looking at, from where we're at right now, you know, a fairly easy 10 to 12% upside move, maybe even something upwards of 25, 30% on a big breakout. And that's the same thing with IDV. Okay, IDV is International Select Dividend. And again, when you take a look at this, again, this is monthly. You take a look at these historical levels here. We've got solid reservation in price. This is resistance right in this area. We've got a good solid flagging formation. We have the rollout. We have an upward target here of almost 26, 27%. But if we were to break above this and get a little bit higher up into this 35 to 38 area, maybe 40, you'd be talking a 46% gain. And these are beautiful position trades for you right now. You would be basically trying to say, okay, I'm going to ride this lower wave out. I'm going to set a base level, exit level down in this area, maybe a little lower. That would be this area. You would have an accumulation zone possibly into this area here, where you would say that if it gets down in this level, I am going to try to accumulate, because that's giving me a great opportunity historically near these low support, and you're going to wait for this move upward. Now look, let's come down and take a look at something else. IEFA, another trigger, 11.15, we're up 3%. IEFA. IEFA, how much data do we have? Well, we don't have much. We do have an upward channel, which is nice to see. I'll come right across these levels here. And then I will duplicate this. Duplicate, clone, and come back off of these upper channels here. What I'm doing with this is I'm trying to find a midpoint rotation. This is a little higher. And then we had this rotation right here that confirmed it. This was a blip higher, 2021. So we're getting this rotation higher. We're in this middle channel. I could turn around and say, okay, clone this, come down into this middle area, right about there. Set this up a slightly lighter color. And understand that we have a buy trigger from 66.24, hard stop at 63.57. That's our protection level. 63.57 is in this area. 63.57 is right in here. That's our hard stop area. And where could we go with this? Well, in reality, we could go up into this upper channel. And remember, this was from 1115 back over in this area, but from right here, we could go up into this area and maybe up back into this area with this upper channel. Now remember, this is a setup where we could see this move over 12 to 24 months. So this is not something that's going to be a week or 2 weeks in length, but this is a good 12, call it 7 to 12% move. Okay, it's a very good opportunity if you know what we're looking for. INDL is 1115. It's already up 9%. Let's take a look at INDL because I watched INDL move considerably through a breakout a while back. I believe it was this move here and this move here. So INDL goes back to 2010. We do have some consolidation across this area. It looks like you could almost come right across here, which is clear, and clone this, and we will set this over here as a lower channel. It really can't get too much lower. It could break down. We have already broken this area here, and we look like we have very strong support in this area, which is a good solid accumulation zone. I would say that we have a fairly solid breakout, meaning I could flag this as a horizontal move or try to come off of something like this midpoint area right across this area and saying as long as this support channel holds, we are looking very good. Now, where would we likely go? I would look at the previous peaks. So we have this previous peak here. We have this previous peak here. And I'm picking the midpoints, folks. I'm not going to the extremes. Trying to be realistic. We have this peak here. And we have a secondary peak right up here. This is a kind of a secondary extreme. So really, from where we're at right now at 53, you could see a move up 17%, 43%, 65%, or 100+% in this area just by following this trigger. And again, INDL has a stop level 46.94, so 46.94 is going to be roughly in this area. There's our stop level. You have fairly solid containment to the downside. Now, from a long-term rotational model, I think this is a very good opportunity for you to diversify a small percentage of your holding. Now, what this means is, as I mentioned to members about 2 months ago, that I believe throughout 2024 and early 2025, we are going to see foreign markets roll around substantially, kind of like what happened in 2013 and 2014. I believe the foreign markets are going to present some really solid opportunities, and I'm highlighting a few of them here. I mean, obviously, I could be wrong, and these could change, which is why you want to come to MENT.com and get into this. So here's KORU. Let's take a look at KORU. But the MENT.com Expert Growth membership provides all of these signals for you, and these are, again, daily triggers that are based on a rotational modeling system. Now, very interesting here on KORU. You can see that we've got this lower channel kind of coming from here. You could carry it across here, which gives us this channel. But you also have a secondary channel which could come across here, which contains price in a narrow format. So that's this low and this consolidation, and eventually we get this breakdown. Now we have this upper channel. It comes from here all the way across here. And do we have any breakout yet? KORU is generating a buy trigger at 804 on 11.6. Volatility is normal. We've got some really big swings in this, but at 804, this could give us some real opportunity. Now, with these types of ETFs, you would have to offset some of the decay involved in these, but at $8, you could easily afford to, add 20, 30 shares hypothetically as this begins to move. But hypothetically, if we look at this rotation and we start to see the corrective move, actually, let me invert that from this area down to this area. If we assume that we have a good solid support buy zone area right down in this area, and we have greater risk below this area down here, we end up with a fairly tight zone where we can attempt to buy into this mode. We will likely run into resistance on this downward channel. So we have to be aware that we have an upward potential of about 144% right there. So think about it like this. We have a real solid 140, 150% chance of a move running up to this resistance channel. A lower resistance channel still gives us a 50, almost 60% move. Think about that, guys. Okay, think about that for a minute. This is a very strong opportunity off of these historic lows from way back here in 2020 COVID to see this potentially rally maybe up into this middle area. So if we were to consider the target areas, we have a target area here, just recent highs. Now we've got to get a little more creative. We've got to look for pivot points like this area here. And I'm looking for upper targets. This area here. And this area here gets a rotation and support. So I will add this right here. And so now we have an area here where if we assume that we can get to this area, that's 40%. We get to this area, that's 82%. We get to this area, it's 101%. Or this area is 197%. That's a 200% return on investment, potentially, in KORU over the next 24, call it 18 to 24 plus months. Wow. I mean, wow. And the opportunity here is that you are looking at, multi-decade lows. Okay, this is 2024. This low over here is 2020. This low back here is 2016. You're looking at cyclical lows that come into very solid play with a recovering market economy, which is likely going to happen after the elections in 2025. Take a look at MEX. MEX is already long. Still, it's at 23 is our long trigger, 55. Last is 28, 28. Potentially have lots of opportunity over here. MEXX. Okay, we don't have a whole lot of data. Being a little tougher for me to analyze this for you guys, but I will do my best. So we have a very solid trend channel coming across here, which got broken. We have a base down here off 2020, and we're coming across these channels here. We just rebounded off of this channel. This is very solid rejection, very solid rejection. We could use these previous highs as potential target areas. This becomes, I'll draw the others first, but this lower channel becomes almost immediate resistance. So we would want to see that clear. And why is MEXX looking as a fairly strong trend? It's because we're starting to see some accumulation. We're holding this bottom. We're away from this kind of a lower zone here. This would be our lower accumulation zone, hypothetically. Anything below that could be kind of a warning that we're getting into weaker territory. I would say really down into this low. As long as we stay above that low, this is a very solid accumulation level. And what do we have as far as upper targets? This becomes a very solid resistance area. We want to see it blow past this. We don't want this to be our target. We want to look here, which is 62, 64%, here 111%, and maybe here 153. So even if we just pick this area here, you're talking a 66% move in 18 to 24 months. I mean, think about it. Really, And this is, again, swing trading, weekly swing trading. Yes, you're going to deal with decay in some of these ETFs. Yes, you're going to deal with the real risk of, having the market stall out over the next 12 plus months through the election. But I'm trying to tell you is that you have an opportunity in this area to buy into these zones. If we get something like this, get some sort of an upper zone that moves like this until we get above this breakout area, then you have all of this opportunity to potentially load up a position and prepare for a very solid move up. You also know that within this range, you can buy into these lower areas, targeting these upper areas, and literally you have a 50 to 60% range in maybe the course of 30, 60, 90 days. These are big swing trades. Look at this, weekly. So understand that these swings over the course of 5-6 weeks, how much did this move? Over the course of 5-6 weeks, it shot up 73%. Not bad for a swing trade. I mean, don't take it the wrong way, but if you're out there day trading, trying to figure out how to grab some trades, this could be some really good options trades or position swing trades for you. I mean, it's just all sitting there for you, and the MENT live trades does the work. So look here, PID, last trade 11:15. Let's take a look at PID. What is PID? PID is Invesco International Dividend Achievers ETF. $17 stock. Let's see how far back it goes. Oh, we got a lot of data here. So, okay, let's take a look at what we're looking at here. We've got some nice solid trend channels. We can come right across here as a base channel. I do like to clone it, see if I can find something on the upper side. We only have really one here, maybe here. Come back down. We've got a number. There we go. Now, I'll show you why I did it here. Resistance, rejection, breakthrough. Resistance, rejection, breakthrough. Resistance, rejection, resistance, rejection. Resistance, rejection, breakthrough. Resistance, rejection. So this is a good solid channel to me. I've got multiple levels of resistance and rejection. This then becomes an upper channel for breakthrough. We don't really have anything out in this area. Maybe here. Yeah, that'll work. And then we have an upper channel way up over here, which is 2007, 8, 9. Now, we would want to extend this up to that level where this peak is, just because that's historically been kind of a peak. That was 2014. This is a dividend producing international dividend achievers. We do have an upper channel here. You can see coming kind of right across here, which provides a very solid support. We've just gotten above that level. We do have a downward channel coming across here. I'll try to rearrange these. We're right at that apex. Beautifully sitting right at that apex right here. Spread this out. Now comes the fun part. So we can go ahead and see that we have based here on 2020. We've rallied up 1, 2, 3, 4, 5. We're looking at a move here to the upside, and we're looking at a potential 16 to 25% rally mode here. Nice and solid. Now remember, this is over 18 to 24 months. It's not going to probably happen overnight, but we're getting some really good setups here. 11:15, 11:15, VEA 46, VSS 108, VWO 42, Yang. Okay, now Yang moves. Yang is one of those stocks that moves. This was from 816. We're up 33% already. I won't follow that. And Yen. Let me come back over here. All of these triggers, IDV, Euro, EURL. Let's take a look at EURL. Okay. Contracting in a downward trend. And this is, again, a bull 3x euro. Europe bull 3x. So now follow the same triggers. We've got rejection here, we've got rejection here, we've got rejection here. Follow it across. Try to pick midpoint rejection. Clone this, look for support across similar channels. We've got rejection, rejection. I would put it right there. So there's your channel. Now, we could go ahead and at that point, because we've identified the outer boundaries, we could come over here to the midpoint. Now, I'm just drawing this. I'm not using math. I'm just trying to get it in the center and highlight this as our midpoint channel. Now, we have good solid basing here. So we have a solid upward channel here. We have consolidation down here. We've seen this double pattern. So, for example, falling, reversing, falling to an extreme. Now, this was COVID. Let me get back to the other chart. So this was COVID 2020, and now we're at 2023 collapse. This is really a solid buy zone, accumulation zone, very deep accumulation down in this area. And we have a good solid range giving us a potential target up maybe into this area, potentially up into this area, and then ideally maybe up into this area. And that gives us kind of a range. We do have a lower level here, which is consolidation. You see this flipping price activity here. This is actually price consolidation and congestion. It also happened back over here. So I would highlight that as well as a consolidation rotational range. So these become my horizontal targets. So what we have here is a move potentially up 9%, maybe 28%, maybe 53%, and maybe 82%. But ideally, we'd probably be looking at this 28% move as a pretty solid target. And again, folks, these are over the course of the next maybe 12, 18, 24 months. If we get a recovery going into the November presidential election, if the economy stays fairly hot, if we get some basing and recovery of the European and Asian markets, you're going to be looking at the potential of some kind of a move like this. So hypothetically, 2017, nice solid recovery. We had 137% rally. Post-COVID, nice solid recovery. We had a 260% rally. If we come out of this move and get something similar off of this move, you're going to be looking like this up in this area, which again, folks, from where we're at right now, is a 73% rally. A 73% rally. How hard is it to understand that swing trading like this provides a very solid opportunity for you to be able to take some very big moves? Now, let's come over here real quickly. And I've been focusing on the foreign market, but let's, for the heck of it, let's come over here and take a look at some of the value stocks. We'll go to rotational modeling, and we're going to look for current triggers in a fairly strong, so here's 12.4, Hasbro. Take a look at Hasbro, see if there's any real opportunity here. Hasbro's been in a very strong downtrend monthly, really coming off of this deep low, off of these COVID lows. I would suggest that you have a fairly strong accumulation zone in this area. I would suggest that we have a very solid downward price cycle here, which could be cloned and replicated across this price cycle here. We just came off a very deep low base support. We do have, if this does hold as support and recovers, we do have a chance of a 48, 49% rally here in Hasbro. Really solid, maybe 25, maybe 40% rally in Hasbro. Now, we come over here, KMB's $124 stock. Let's take a look at it. We're off a little bit today. And again, what we're looking for is very solid breakouts. So here we have a flagging formation. You can see it almost instantly right across here and right across here, coming down pretty much into this area. You've got the upper channel here moving into A, B, C, D. Now we should be moving into an E breakout formation. You do have a pretty solid buy zone, accumulation zone across this area, which gives you a very solid move to try to get into these deep lows. This is Kimberly-Clark. And you would be looking at, like I said, potential targets up in this area, potentially up in this area, and potentially up in this area, which would mean you'd be looking at, from where we're at right now, 13 to 18 to maybe 26% upper target, just off of this current live trades rotational modeling system trigger. So let's come back over here, and gee, you want to look for more triggers? Having trouble finding out what's going on? Let's go to the hot shots. Let's go to rotational modeling system. Let's take a look at, find something that's moderately inexpensive. Ford, maybe. Let's take a look at Ford. Ford is one of those stocks that typically has trouble getting out of its own way. Okay, it really is. You know, you've seen back here, 1998 up to 30 bucks. We're basing, we're flagging. You can see we have very long support coming across here. We haven't yet got down to those levels. We broke out of this downward channel, which had our move here in 2021. We now have kind of a downward channel setting up here. We have yet to break out of it. We have a lower channel kind of across here, which is setting up a flagging formation. If we were to try to do a count, you could count here A, B, C, D, maybe getting a breakout over here to the upside. Very good opportunity here, probably, in my opinion, to try to buy below this zone. So that would be buying below 11, maybe 1150. And we would be targeting a move potentially up into this area, 35%, maybe this area, 58%. And those areas really come from this middle channel here and this consolidation, which goes all the way back across these highs right up into this area. So again, kind of hard to miss the opportunity here. You got very tight stops. You can trade these very effectively. There are hundreds of these setups every week, literally hundreds of them. You know, we've been looking at the hot shots. We can come in here and go to the Reddit list. We can come in, go to rotational modeling system, and we have dozens more. RC, what is RC? RC doesn't have a lot of data. Ready Capital Corporation in a solid downtrend. I would probably ignore that one. Doesn't give me enough data to make a decision. AI, ooh, that's interesting. AI is an AI company. Very deep rotation here, not a lot of data. Again, you do the same kind of channeling coming across here, kind of draw this with a clone, move it across the upper resistance channel roughly here, and that gives us an opportunity to say that we have a 57% potential upside target here. May be worth it, but very early stages of a recovery. Let's come in here. Allstate's been on a tear. This was a trade from 918. Look at this, Allstate. And sometimes the bigger companies can actually provide very solid opportunities for 10, 20, 30%. You can see Allstate's just been on a terror. So hypothetically, we go to the midpoint here, come across the midpoints here, and you can see how easy it is to see these midpoint levels. And then we would essentially want to clone this and try to align it up in these upper areas. Up into here looks good. We have resistance here, breakthrough, resistance, rejection, breakthrough, rejection, breakthrough, rejection, breakthrough, rejection, breakthrough, rejection, and now we've got a breakthrough area. So why wouldn't I be too happy about trying to get into Allstate right now? It's because we're up into the rejection area. Okay. And secondarily, we've already been in the trade since September of this year. We're up 28%. Was a great trade, but just not want to chase it. So let's look for something a little newer. AMD 11.6. Let's look for something newer. 11, 11.15, 11.20. In fact, let's come up here and new triggers. This is the newest rotational on the Reddit list. So GM 11.30, GameStop. Oh, I know you guys are probably interested in GameStop. GME. Okay. GameStop's got a new bullish rotational trigger right here. Got a brand new trigger from 11.30 at 14.55. We have a protection level of 11.07. Here's GameStop. Basing down here, and you can see, again, look at how solid this basing level is. And again, this gives us really a solid accumulation zone right in this area. Where could it go? Well, you go to a Fibonacci, you come to the midpoint here. I'm going to pick this double top down into this accumulation zone, and now we have some targets. You could see GameStop right now rally. Let me drag this out of the way. You could see it rally 118, 180, 237 just on a rebound recovery. And this could be a very interesting options play. It might cost a little bit at $15 roughly where GameStop is right now, but understand you could see this rally off of this rotational buy trigger maybe 80 to 200% over the next 12 months. And boy, oh boy, that would be exciting. Okay, so now what's the value here? Really, the value is come to MENT.com, check it out, understand that, here, let me come here, I'll open up a new tab, and I'll go to MENT. You really want to pay attention to what's going on here. Okay, MENT.com provides very solid support for you, and it's very easy for you to go ahead and get started. Okay, it really is. 60-day trial for $34.99. And like I said, my job is to help you find and execute better trades. I'm not going to I'm not a day trader. I don't chase swing trades. I mean, I do day trade on my own, but with models that I have. That's what the interruption was, one of my server connections, interrupting, saying, do I want to stay connected? But ideally, I'm trying to teach you how to day trade. And there's all this training, or not day trade, swing trade. And there's all this training for you to go through. So if you like what I'm showing you and you want to learn how to do this on your own, come check it out. It's really inexpensive. It's going to help you. And like I said, you know, I read an article about Citadel today. Citadel, one of the largest hedge funds and asset management firms on the planet, was coming out saying, hey, we made 17% in 2023 as of November of this year. And I'm thinking to myself, wow, you know, catch one or two of these good trades and, you know, you could double, triple, quadruple that. Very easy. So again, if you want to learn how to try to have a life, take it easy, trade effectively, come visit MENT.com, sign up for the expert growth services, and I believe you will find real value very, very quickly with this service. All right, guys, thanks a lot. Bye.